Here we are in 2022, and I consider 2022 to be a pivotal year because presumably they're going to have to transfer really over 610 trillion in notional value derivative contracts onto the new benchmark. And while that may sound like gobbledygook and, oh, no big deal because they can do it, first of all, it's never been done before, ever, ever, ever. So this is a grand experiment. I remember when they tried it with 80 trillion a year ago last October, and then they moved the date to change it because they couldn't do it. Sooner or later, we are going to see an important adjustment in the exchange rate, and that is going to have an impact on prices. In other words, they're going back through the roof because all of this artificial suppression does not really suppress the truth for very long. And actually, probably if you're living there, you already know what the truth is. But you see here in the US, inflation hitting 7% in December, the fastest pace since 82. We're going to look at that a little bit more closely because different things were happening in the 80s. However, what I want you to keep in mind is that during the 70s and 80s, we were transitioning into a completely new, purely debt-based system, and we are transitioning yet again. So there are a lot of parallels that you'll see between the 70s and the 80s and today. The cost of mining gold is inflating too. But let's see, does the spot price reflect that? No, it does not. But what it does reflect is a wedge formation. Remember, this is just a contract. Will miners continue to mine if they are losing money? And the answer is no. They can't. They can't stay in business. Only if you're Amazon can you stay, or other Wall Street darlings that can stay in business even though you're losing money so that you can run somebody else out of business. But, you know, people ask me all the time, so when is it going to be reflected? Well, it's really simple, okay? When all confidence is lost in the central banks and in the governments, and the currency goes into full-blown hyperinflation, then they do an overnight revaluation. Fiat money that has no intrinsic value against gold money that is all intrinsic value. That's how it happens. I don't really care what happens so much with spot in the meantime. All this does is help me buy it cheaper, just like the central banks are doing. But it's not getting cheaper to mine, so the pricing has to go up. Get it while you can, while it is cheap. And you need to get this done as quickly as possible. You've got over 410 trillion notional value interest rate derivatives. Can they raise interest rates? No, but they have to. They have to for their credibility. And even if they did it to the max, they are totally behind the eight ball. I don't want you to be behind the eight ball. I want you to focus on food, water, energy, security, barterability, wealth preservation, community, and shelter. Please get it done. Please, 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 while you still have a chance to do it. Because the problem is, once the crisis becomes obvious to everybody, it's too late to do anything. And that noose is tightening. That noose is tightening so much. Look around you. Look at what you see. We are losing our freedoms. You know what this really does? This helps you keep some semblance of freedom. And we need to. We really need to. It's the scariest part is the world that I'm leaving my children and my grandchildren. I'm going to make sure, I'll do my best to make sure that they can be as independent and self-sufficient and have choices as possible. That's what we have to fight for.